E aku rau langa tirama, tēnei te mihi e. Haere mai, whakatau mai rā e. Tēnei anō, he karanga atu ki ngā tini whetu, te kāhui whetu o Matariki e. Tēnei te mihi e. Tēnā rā koutou katoa, nau mai, whakatau mai rā. Ki tēnei anō te kaupapa o tātou. He kaupapa kōrero, mai tēnei anō o ANZ, kia koutou, kia tātou, e whakarongo mai ana. I roto i tēnā, ka tika anō, o tēnei wā o Matariki, kia mahara anō, kia rātou kohiturangitia. I roto i tēnā, ka tika ki te mihi atu, kia rātou, korunga atu ki te karanga o iwa. Aue rā, hoki wairua e, aue rā, hoki wairua e. Rātou kia rātou, tātou ngā kānohi ora tia tātou, tēnā no tātou katoa. E honori tēnei kia mātou, o te pēke nui o te ANZ, ke te mihi atu kia koutou, nau mai, whakatau mai rā, ki tēnei kaupapa, te whairawa. E roto i tēnā, nau mai rā, whakatau mai rā. It's a real honour and a privilege for us to welcome you here today, this afternoon to Whairawa, at this time of Matariki, at this time as we come together, a hunganui, Matariki hunganui, the many gatherings. So I hope you enjoy today, the webinar where we talk about Whairawa, the opportunity where ANZ and our staff here will share some whakaro, will share the opportunities and the products that we have at the ANZ. I roto i tēnā, tēnei anō te mihi atu kia koutou. Mo tēnei whakatau ki tākiri ārangi, tākiri ānuku. Tākiri tāwatia kia pūai ki te ao, te kare āroto e. Tēnā koutou, a tēnā no tātou katoa. Ka tukuna atu te wā, to hand it over to you, Mel. Enjoy the webinar today. Tēnā koutou katoa.
Tēnā tātou katoa. Welcome everyone, I'm Melissa Frick and thank you for that, Carleen, beautiful mihi whakatau for everyone. Now I'd like to welcome you along to Tina Pina Pina Kapawhiti, our cash flow webinar this morning, and I'm super excited for our third in the series in the Māori and Business webinars. Just to let you know, myself and a few presenters, which I'll introduce you shortly, but just a little bit of fine print. Today's webinar is recorded and will be on the website later for those of you who'd like to watch it. It will be up in about a week's time. On screen is our general disclaimer, and the webinar is made of a general purpose and not in any place of any personalised advice for you and your business. At the end of today's session, we would love to get your feedback, and if you'd like to get what we call an A to Z review, a review on your personal or business situation, you can tick this at the same time as doing the review. So today's session will be run in Zoom. As I said, it has been recorded. You have all been auto-muted except for our speakers, and your cameras disabled. Your chat and your hands up function are enabled, so we'd love to interact with you throughout today's session. So please drop any questions you have in the chat box. We'll endeavour to answer them for you at the end of today's session with our speakers. Just so we know that you've got in the chat box, we'd love to know where you're tuning in from. So where in New Zealand are you, and what sort of business that you have. So just drop that in the Q&A, would be fantastic. I will run today's session along with my colleagues. So if I can just ask for those to pop on screen. So Carleen Everett, our head of our Māori strategy here at ANZ. Carleen, thank you. Do you want to say a few words?
He mihi atu kia koutou anō. Just really, it's really lovely to be here with you all. And I'm proud to be Te Kaitohu Rautaki Māori, the head of the Te Ao Māori strategy. Kia ora koutou.
Thank you. Myself, Melissa Frick, as I said, I'm one of the business training managers here, logged in from the sunny Waitakere Ranges this morning, looking out at the beautiful surrounding native bush. I'm also here with my colleague, Crystal Talavai. Crystal?
Morena, everyone. I'm super excited to be co-facilitating with the fabulous Mel this morning. I'm beaming in from the beautiful Taupo. I've lived here for about 3 years and I absolutely love it. And I'm really looking forward to having a good kōrero with you all around all things cash flow. See you soon.
Thank you, Crystal. And Paige, welcome along.
Kia ora koutou, ko maunga pohatu te maunga, ko tauranga te awa, ko mā tātua te waka, ko tūhoi te iwi, ko Ngāti Raka te hapu, ko tātaia hape te marae, ko Paige Olsen tōku ingoa. I am a relationship manager in ANZ Business based in Rotorua. I have been with ANZ since 2014. I really enjoy being in the business space, working with you, our customers, supporting your journey, your growth, and ultimately contributing to New Zealand's economy together. I do have a particular passion for Māori business. I love seeing our whānau succeed and seeing our overall kaupapa and priorities for our Māori. For example, seeing that we have a different view of the bottom line. We all want to make a profit, but also that common goal to create wealth for whānau and for future generations. Anyway, that is enough from me. I will hand back to Mel and you will hear a little bit more from me later on. Kia ora.
Thank you all. And we will turn our cameras off at this stage as we get into the presentation. So, kai oko te rangi nei, or what will you learn today? So we're going to go through why do a cash flow forecast and the key benefits, creating a cash flow forecast and identifying those options to help you improve your cash flow. So your cash flow is your flow of cash in and out of your business. Then Crystal in the second half will go through your terms of trade and options to make sure that you get paid faster. And as we said, there'll be an opportunity for you at the end of today's session to ask us any questions that you may have. And looking in the chat, we have a great amount of people from all over. We've got concrete businesses, cleaning businesses, exporting, management all over the country. It's fantastic to have you all along, all the way, Napier, Auckland, all sorts. So thank you all for tuning in and being with us today. So we're going to go through Te Matapai Kapawhiti or cash flow forecasting. So why do it? Why is it important? So what we've found, a lot of businesses or most businesses will fail due to poor cash flow. Okay, and a lot of those businesses were profitable when they fail. So I've been in the bank 20 years and I have seen it as, you know, a business manager. I've got my end of year financials. I made a profit, but I don't know where the cash is. This is the prime example. And we'll go through why it's so important with you today to keep track of that cash flow going through in and out of your business. So, Pākehī angi tū. So, what do successful business owners do? So, successful business owners will have a good financial system in place. So there's a lot of things to help you. So obviously digital software out there, there's two main ones out there. They'll help you keep this up to date and keep accurate and up to date accounting records. But just make sure when you do have that, is the data that you put in is the data you get out. Review and manage your profitability. So how much money that your business is making, and review and manage their cash flow effectively. So they know what cash is coming in and out of their business at any time, and they can make those key decisions around that. They regularly check their working capital, their solvency. So can you pay your bills on time, basically? Keeping control of your operating costs and looking at where you can do that and manage those costs. Effectively managing risks and having adequate insurance cover for those unexpected events. So what we've found in the past is 80% of businesses are underinsured. So it's really important to review that. There's things that can change for you in your personal and your business life that will affect what needs to be happen and change to cover you in the business. And like anything, plan, action, measure, and review. So consistently look at your plan, take action, measure, and review it and change and adapt as you go. If anything, COVID's taught us to be adaptable and move with change. So next, he kite mā tauranga. So a toolkit to keep your business on track. So when we talk about this, we like to sort of think about it as a car. Now it can be a petrol car or an electric car, if you like to think sustainable. When we talk about your business, the first thing is break even. So this is sort of how much you need to keep the motor running, or like I like to say, how much do you just need to get out of bed in the morning? Okay, your profit forecast, this is like your GPS. It's giving the direction you want to go. So, but what are you in business for? Are you making money for the whānau? Are you making some money for that extra holiday? What is it that your goal is that's driving that along in the direction you want to be? Your cash flow forecast. This is making sure you've got fuel or your batteries charged to get where you want to go. If anyone's been in an electric car, I did Tongariro crossing. We just got to the top of Whakapapa with about 10% battery. There's definitely a bit of anxiety when you're trying to find a charger. So your cash flow forecast is going to help manage that anxiety and help you see any peaks and troughs and where you might need some cover in that. So your cash flow forecast is like your reality check. You're accounting for diversions, roadblocks, fuel consumption needed for the journey. So it's just going to help take out that stress for you when you need it, managing those costs and those tax obligations that you need to pay, getting things paid on time and keeping that manageable for you and your business. We'll next go through whakamahere matapai kapawhiti. So how to use your cash flow forecasts. Your cash flow forecasts, if you take one thing today, are so important for every stage in your business. They help you to meet your tax obligations. I've always said consistently in my role in the bank, paying tax is not a bad thing. It's just part of being in business. And if you're making a profit, isn't that good for you and everyone? It can help you plan your asset purchases or when you're going to take cash out of the business to invest on it. To help you plan for growing or expanding your business. Benchmarking your performance. So benchmarking is where you compare your business with like businesses in the same industry to track for performance. We do go through that in some of our other webinars around financials. It'll help you test strategic scenarios for your business. So you may look at taking on another staff member. What could that mean? Putting another salesperson or a vehicle on the road, how much are you going to need for that? And build your case for an investment. So it's just helping you make those planning suggestions. And as I said, reducing any stress or anxiety for you, because you can look at what trends are happening in your business and you can anticipate and take action before crunch time happens. For example, contacting your bank before you need an overdraft and explaining to them why you need it, or potentially talking to your suppliers about, extended payment plans and different things like that. But just be realistic if you are doing forecasts on track. Right, so now we're going to go through here to era kapawhiti, or a cash flow forecast example. You can find this cash flow example on our business hub. So we'll just go through this. You can use this in your own business. If you don't have an accounting tool or anything, it just works like an Excel spreadsheet. So as you can see, at number 1, you receipts. Now, if you're a new business, you're probably looking at if it's your sales, looking at your time, working that out, how many hours you're actually going to be working and actually selling, or how many widgets or products you're going to sell. As I said, keep it realistic. If you've got similar businesses, you could talk to your accountant around helping you around setting this up, being a new business, or if an existing business, you could base it on last year's sales. The second part is around your payments. So you put around all your general expenses or your accounting fees, any salaries. You do include your tax here. on it, as you can see in the number 2 section, less payments. So you can work that out. And then you'd have your total receipts in number 3 and your opening and closing bank balance. And this is going to give you either positive or negatives in different months, depending on your business. It may be a seasonal business, and you could be affected by the seasons. You could close over Christmas, for example. So you may want to put some funds away from your busier months to help you for those situations where you have it. So it just will give you an idea of the flow of cash coming in and out of your business. And you may want to look at things like timings of your payments and different scenarios like that to help you to manage that correctly for your business. Other benchmarking you could use is from Statistics New Zealand as well. And that's something, as I mentioned, is you can talk to your accountant around that and using like for like businesses. So next, we're going to go through Ngā Pito Koreo, or we're going to recap the key points we've just covered. So when you're doing your cash flow, you really want to be realistic and conservative, especially around your sales revenue. So for example, when I've seen some cash flow forecasts over the years, I always would talk through at a forecast and go, well, we know there's 365 days of the year, but can you realistically all work 365 days a year, 24 hours a day? No, you can't. So you need to allow for that downtime when you're not selling, potentially doing admin or quotes. You know, we all need some downtime for being sick or having holidays. So just allowing all of that in there and be realistic and conservative when you're working out your sales revenue. Be aware of that seasonality. So every business has some seasonal variations, whether it's simple as summer or winter, closing down at Christmas, all those different variations. Just allow for that when you work it out. Remember tax provision and other tax payments. Your cash flows are GST inclusive, so they include GST, so keeping that in there. Just making sure you're really keeping your cash flow figures optimistic. Your accountant, as I said, will help and look for things that you have potentially missed. They will help you look at that benchmarking figures, and they can just maybe help, you know, just keep it on track around those things, as I said, about working out your hours that you are going to work, time that you can charge for within your business. As I said, there's 2 main accounting tools out there that you can use for your business, and those are very helpful to keeping you on track with how things are going. At this point, I'd love to hand over to my colleague Crystal to take you through the second half of the presentation. Thank you.
Kia ora, everyone. So I'm going to take you through whakawhanake ka pewhiti. So we're going to have a look at ways to improve your cash flow. So the first thing we're going to have a look at is number 1, tahi. So work with your suppliers. Always remember your suppliers are going to be one of your key and most effective relationships in business. Something I want you to kind of think about, or do you do regularly? Have you looked at technology, or has technology improved or been developed that means the price for the same or similar product may have reduced with another supplier? Keep researching the supplier market. Whilst it's your best relationship, and it absolutely is, I really want to challenge you around, when was the last time you researched your supplier market and took advantage of any of those technologies out there that might have made doing business cheaper but easier for a same quality product or service? Second thing we're going to have a look at, number 2, rawa. So review your spending. Now, this is super important. Make sure you are reviewing and categorizing your spending. Sometimes in business, cash flow can feel a bit like a leaky bucket, we call it, a leaky bucket. So if you do categorize your spending, this will help you understand what you're spending and where you're spending it. So what you're spending and what you're actually spending that money on. This is absolutely critical to make sure that you understand every dollar that's going out of your business in terms of expenses or money you're spending will hit the bottom line, i.e. it means it comes off the bottom line. And we know that not all expenses are created equal. So remember that every dollar you spend is eating into your profit margin. So it's really important to consider the cost benefit of every expense you have and regularly do that exercise. And then we've got toru. So become more efficient, or make sure your business is as efficient as it possibly can. This is one of the key points I really want to cover. So making your business operate more efficiently can improve not only your bottom line, but it can also make it easier to run and manage, and make it easier for your staff to deliver a great customer experience or better customer outcomes. It's a good idea to take a targeted look at your current processes to analyse and understand how they can become more efficient. Then what you can do is take advantage of the new techniques and technology that you may have found, and this can potentially boost your efficiency. One of the other things that's really important is number 4, FAR, to shorten your payment cycle. Make sure you're having a critical look at your payment cycles at the moment. Also, make sure you accept a variety of payment options, including online payments, online selling. As I talked about, if you are invoicing, thinking about shortening your cycle, perhaps from 14 days to 7 days, or 30 days to 7 days, especially if you're business to customer. What this will do is it will help you get well on the way to improving your cash flow, but you've got to review your payment cycles all the time and identify new and better ways for you to get paid. The other thing I want you to really think about is the whole thing around identifying and targeting new markets. So I'm going to kind of pull 5 and 6 together. So identify new target markets and consider selling online. The great thing about this is it allows you to engage the correct social media channels for your business. What this means is it's going to put your brand and business in front of more potential new customers. One of the expectations that we have as customers in New Zealand, so business owner hats off and customer hats on, is that we really do think about having an expectation that businesses are online and that we have an easy access to them. So make sure you do have an online presence of some form. So if you're not currently selling online, do think about that, because what actually happened is, and this is a direct result of COVID, a lot of businesses lifted and shifted their offerings online, whether it be a service through messaging using social media platforms, or whether it be selling directly online. And what happened was a lot of business started to increase their cash flow. So that has a huge positive impact on your cash flow. I want you also to think about reviewing your pricing strategy. So it's and do this regularly. So just don't do this as a one-off exercise. Make sure you're reviewing your pricing strategy all the time. And so the way you could do that is thinking about making sure that you're setting your price right for your goods and services. That's the first thing you need to do. And there may be some research around that, but make sure that your prices are not too high that customers aren't going to be willing to pay for them, but also not too low that it puts your overall profitability at risk. So I just want you to use your chat bar now. I want us to take our business owners' hats off, and we're going to put our consumer and customers' hats in. So something we should be doing all the time as business owners is jumping into our customers' shoes, right? And really feeling the experience, the branding, everything about your business from a customer perspective. So from your customer's perspective, with our customer hats on, who would pay a little bit more for quality? So just use the chat bar and say yes or no. So who would pay a little bit more for quality? Wow, look at that, bing, 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 booming into my chat bar there, team, loving the engagement. And that's what we love about Zoom, and then able to hear your virtual voice, your thoughts, your feelings, your questions. We really want to bring you into the conversation and bring you into the kōrero. So make sure you are using your chat bar. So I've got 100% of team yes. The reason I do this, ask that question, do this activity, is when we used to do face-to-face webinars, so workshops, we now do them virtual webinars. I'd asked this question to about 5,000 business owners face-to-face, probably over 3 or 4 years. I would have probably 3 people that said no. That is my point. People will pay, all of us as consumers will pay a little bit extra for quality and a little bit extra for a really good deal around a service or a product. So make sure you're reviewing your strategy and make sure you're thinking about putting your prices up when the time is right. Because as a business owner, you can't afford to absorb all those costs. And we're living in a reasonably rising cost environment at the moment. So make sure you are reviewing your pricing, you're doing the market research around that as well. Lastly, so we've got Waru, utilize invoicing and accounting software. And the great thing about this is just thinking about how much easier that's going to help you in terms of your business, right? So the common ones you might have heard of are MYOB and Xero, and they're probably the most common ones that people think of when they think about accounting software. But what it does is it allows you to spend more time in the business because that accounting software is helping you taking care of the financial aspects of your business. So it's going to get you more time in your business and get you that all-important time back in your calendar every day to spend more time thinking about your business. And so whilst it'll take care of the financials, it frees you up to spend more time in your business. I can't stress that enough. It's absolutely imperative. So think about how you can adopt and use accounting software. I'm going to show you a really cool exercise now. So we're going to have a look at Nautu and thinking about discounting versus increasing your prices. So I'm going to walk you through this and it's really cool. So we've got a bit of a dilemma team. So we're a group here, we're sharing the love here, the aroha. And so we're a team. And I want us to think about this is our business together, right? So we're a retail business. We've got this dilemma. Revenue is decreasing. You can see on that graph on the left, and it has been for the last while. And so we've got a bit of a dilemma here. Do we raise our prices by a rima %, or do we discount our prices by a rima %, so 5%? And so I'm going to walk you through a bit of an exercise to kind of really understand, because if we raise prices, we may risk losing some customers, but it may be a risk that we're willing to take. However, if we decrease by a rima %, we may lose margin, but potentially sales might increase. Let's have a look at what that's going to look like now. So before I take you through this, I'm going to just really give you an example again of what break-even analysis is, or what break-even is. Mel talked a little bit about it at the beginning, but just a reminder, your break-even point indicates the minimum level of sales or income that your business needs to make to meet your overhead expenses and achieve your profit margin. So what you need to make just to get out of bed every day. This is an important calculation that helps you work out if your prices are set correctly and that you have enough demand to cover your fixed costs. So let's go through this. And as you can see, this is us now, team. So this is our business, our retail business. Currently, the product we're selling at $100. Cost of goods sold is $60. So your COGS, so what's going to cost to manufacture, is $60. Our gross profit is $40. Our gross profit margin, we know, is 40%. And our overheads are $40,000. And we need to sell 1,000 products. So let's have a look at our break even. So 40,000 divided by the 40, which is your gross profit, times 100 is 100,000. So what if we were to discount by 5%, right? So now what we're going to do is our sales will be $95. Our cost of goods haven't changed because we haven't gone out there and we haven't looked at technology. We haven't worked the market in terms of supply and done that research around, does anybody in the market or as a new supplier come in? So if it's stuck at $60 because we haven't done that research. Our gross profit has now dropped to $35. Our gross profit margin has also dropped to 36.8. Now we haven't done that line by line exercise and really had a look at categorizing our spending and our overheads and our expenses. So our overheads haven't changed, it's still $40,000. But what we now have to do is shift 14.4% more product or sell an additional 144 products because we've actually discounted it by 5% down to $95. If you are in the service industry or market, I want you to think of this as your time, your energy, your effort. So what we're saying now is you're potentially going to have to work, because you've discounted your hourly rate, you're potentially going to have to work an extra 144 hours, team. I'm not quite sure about you, but I don't think any of us really want to do that. So let's have a look if we increased our prices by 5%, so 5%. Let's have a look and see what that looks like. So we've increased our prices by 5%, so it's now $105 each. Cost of goods have remained the same. Gross profit's now jumped up to $45. Our gross profit margin is now 42.9. Overheads are 40,000. We actually have to sell less product at 888. So it's a minus of 11.2%. But what has it done to our break even, right? So what do we need to make just to get out of bed every day? So your 40,000 divided by your 42.9 times 100, so that's divided by your gross profit margin times 100, is 93,240. So as you can see, our break even has decreased as well. So the reason I love doing this exercise is just to show you and get you to really think away in a real visual way when you do think about discounting or increasing your prices, what that can look like for you. Now, if you pop over to BizHub, you can actually do break-even analysis yourself. It will actually help you using your financials, be able to work out your own break-even. So please make sure you do that exercise. It's a nice digital form, so you just have to plug some numbers in from your financials, and it will calculate everything for you and give you that all-important break-even figure. Kia ora for that, Luna. I can see she's popped that in the chat bar now. Now we're going to have a look at, we're going to pivot a little bit, and we're going to have a look at your terms of trade, which are really important for people in business. It's really, really important. So thinking about your terms of trade, this is all about getting money in. And so there's some key points I really want you to consider. But before we talk about this, I want you to think about when adopting terms of trades, there's lots of one-size-fits-all approaches that you can actually get in template form offline, but this is unlikely to give you and what your business needs. So the more the terms of trades are tailored to your unique business, the more effective and useful they will be. So one of the things I really want you to be thinking about is, who are you granting credit to? Okay, so who are you granting credit to? And please be careful who you do grant credit to and when. I make a really critical decision around that when that happens. And if you are granting credit and there is some red flags around, perhaps they're not paying on time, you need to think about those terms and making sure you need to end those terms when you absolutely need to. Perhaps you're asking for a deposit up front, depending on the industry you're in. So that could be for materials. I've done this. So before I moved to Taupo, I lived in Auckland, Tamaki Makaurau. I lived there for about 20 years. And before we moved, we renovated my house. And I had a little, it was like the block. It looked like the block, honestly. And it was about as much drama as there was on the block, actually. But I had lots of, subbies and contractors and tradies. But most of them asked me for 25% up front when it mattered so for the cost of material, and I was happy to pay that. Thinking about also applying discounts for prompt payments. So a lot of companies are offering a discount or an incentive for prompt payment. What this does, it rewards the customer for paying quickly, right? So, and that really does have a positive impact on your cash flow. Bit of food for thought around that though. Discount/incentive cost versus time and effort in recovery of trying to recover the funds because they pay late. And so that might just balance out nicely and be a little less expensive if they were to pay, if you offered a a discount for prompt payment. But that's a personal choice for your business. But it is, some companies do that, and they do find that it has a favourable impact on their cash flow. The other thing is really important, make sure that you are factoring in and advising the cost to customers on your invoices around what the potential costs are for debt collection. Be very visible and transparent around that. It'll save any problems for you later. And lastly, I talked about this earlier, but thinking about your invoice cycle. And so these days, especially if we're using trade, so business to customer, we have an expectation that we see 7 days on invoices now. You know, they came in a couple of years ago, and it's a lot of business still haven't got on that kind of bandwagon. But for new customers, set different terms of trades to make sure you're shortening those invoice cycles. For existing, you may have to honour those current terms of trade, but for new customers, make sure you're really clear with new customers around what your new terms of trades are. And so what we're going to move on to now and have a really good look about, which is a really important factor in business, which will have huge impact on your cash flow, is actively managing your costs. So like I said, we're going to have a look at that now, but thinking about all those things that you can do to actively manage your costs. So talk to her inga aha inga. And one of the first things I want to think about is taking advantage of technology. And this is really critical. So there's this term used called a digital native, okay? And actually, I'm going to chuck it in there in the chat bar. Who knows what a digital native is? When I say to you digital native, this is where you get the opportunity to coordinate all back with my team. What do you think a digital native is? So use your chat bar. When I say to you the term digital native, what do you think a digital native might be? So just use the chat bar and let's have a look at what some people think a digital native might be. Oh, lots of question marks, Angaru. So Sophie, technology whiz. Kia ora, Dylan. Oh, beautiful, Dylan. You've nailed that on the head. Wouldn't have a clue. That is my teenager, Gladys. That is my 16-year-old son too, my friend. Shayla, question marks. Kia ora, Doug. Someone familiar with technology. Kia ora, Hiria, someone who grew up in a digital tech environment, social media. Now, my son, who's 16, is a digital native, right? So they're just born, they just get it, they understand it, they don't have to think about it, they just know. To the point, whereas my son from the age of 11, he's 16 now, NCA level 2, he was on, they didn't have books, it was foreign, they just do everything on their Chromebooks and stuff. The point I want to make, team, is you don't have to be a digital native in this world to get technology, right? And most of us business owners, you know, I'm kind of, you know, just enjoy celebrating my 50th. We won't be, but we have the mindset, the growth mindset to be digital thinking. So we're digital forward. Every one of us can be digital forward. And that's really important distinction to make. It means we can learn, we can nurture, we can grow, we can take on board technology. And that's why it's really important that we're taking advantage of any technology. It can help you save money on everyday business expenses. It can help you do better business with your customers. We just got to embrace technology. Outsourcing. So here's a really cool one. At the moment, finding and employing and training staff can be a major expense if you can get the staff, that is. So rather than hiring your own staff or, you know, trying to go through that recruitment process, consider whether you can outsource some aspects of those jobs, such as administration, accounting, we talked about that, manufacturing. So can you outsource some of your functions to a company and a business that's their bread and butter? That's what they do. They do everybody else's work, right? So think about outsourcing. It might be right for your business. Also, trimming your product lines. You're going through your products and having a really good look. Have you got some products that have been sitting on the shelf for a while? Have you all of a sudden, if you're a service business, got lots of service, but you've kind of grown really hugely, and some of them are performing better than others? So consider getting rid of poorly performing products or services. And for those products or services that are performing really well, look at increasing perhaps production of those products or services, but really think about your own product range and reviewing that regularly. Reviewing your advertising effectiveness. Now, this is a really cool one. So thinking about, we need to get that marketing, that advertising, that digital social media stuff. It's essential to reach your customers, but it can also be quite expensive. So really thinking about reviewing your existing advertising budget or costs to make sure it's delivering the results that you need and are worth the investment that you are paying for them. And that's the important part. Are you getting bang for buck? And thinking about social media and other channels that you can use to be more effective in getting your business's message and brand messaging out to your customers, but also your aftercare plan to re-engage and reinvest with your existing customers, which is really important. Also, if you're kind of shops and stuff, retail, review the cost of renting or leasing, or if you've got renting and leasing buildings. Make sure you're thinking about if your rent is creeping up, have a korero to your landlord. They may be able to do something for you, or they may be able to review your rent. Depending on your business, you may also want to consider moving to a more cost-effective location or higher foot traffic location. It's really, really important. Just because you've been there for 5 or 10 years, maybe some of your customer flow or traffic, maybe there's been new subdivisions or new buildings in another area where it's more attractive and it's taking foot traffic away from your business or your retail store. So make sure you are reviewing that. Are you in the right place, I guess, at the right time? Lastly, ask for help. We run these webinars because we want to support business owners. I mean, we know that New Zealand is built on business, all shapes, all sizes, and it's amazing. So we're here to support business owners. So also have a think about surrounding yourself with a team of support. So that could be your accountant. A lot of accountants are now moving to almost like business coaching or business mentoring as well. So have a think about a lawyer, a mentor. If you bring on a business coach, just make sure you surround yourself with a really cool, supportive team who can help you also to be really, really successful. Now, team, I know we've been through a lot of information this morning, or me and Mel have taken you through quite a bit of information. So what we're going to do now is we're going to have a kia mo. So we're going to recap, and I'm going to take you through, give you a quick kind of high level overview of what we've talked about today. So that's kia mo. And so money in. So number one, which is really important. So tahi, money in. Focus on cash flow first. A business can survive short term without profits, but not without cash flow. So it's really important to remember that. You want to get paid quickly. So reduce your net days to be paid or offer incentives for fast payments. We talked about that earlier. Make it super easy for customers to pay you by setting up simple payment options. Could be like contactless or PayWave if you're not using it. That's become huge, even now, how many years, kind of into middle end of COVID. But there's a customer expectation that you have PayWave and you offer that for customers. Raise revenue. Make sure you regularly review your customer pricing. I talked about that. Remember, we've all said as customers that we would pay a little bit extra for quality. And thinking about your segments and marketing with a view to increasing your revenue. And then we've got step rua, so money out. Assess the amount of money you're outlaying and spending to see if there's a smarter way. Always remember to try and plug the holes if your cash flow feels like a leaky bucket. Really important. If it feels like a leaky bucket, you're going to have to plug those holes, but you're going to have to understand why there's a leaky bucket. Manage paying suppliers, so negotiate extended terms or payment terms with your suppliers where you can, where you need to. So be really proactive in that space. Thinking about lowering your costs. So review and look at your cost of sale, your staff, and any operating costs, and see if you can reduce those costs. And remember, go out to the market. Has technology come along that could make products or your cost of goods a little bit cheaper to manufacture for the same quality. So make sure you're doing that exercise. Also thinking about spreading your payments if you are having, and Mal talked about it, seasonality, right? All business has seasonality. It's just not on the agri sector. All business will have some level of seasonality. You've got to plan for those leaner months. However, for some reason, those plans you did and those plans didn't work out, think about options to spread your payments. A good way to do this is see if you can pay in installments or pay some bills by credit card to extend your payment due date. And so some banks will offer business cards that help improve cash flow and offer up to 55 interest-free days on purchases. So that's another great way that we can support you and your business. So step toro, so managing your money, structure your cash flow to make the most of your money. Really important. So structure your cash flow to make the most of your money. Thinking about go mobile. So taking your accounts with you online with mobile banking and using those awesome integrated accounting apps such as Xero, MYOB. And this makes it really easier to see where you are financially at any point in any time. Manage your inventory. So if your business has physical inventory, can you reduce your stock on hand or shop direct from the factory to make sure it's more easier and more affordable for you to do business? Lastly, technology team. Remember, we're all digital thinking and we're all digital forward. Remember to explore using technology to make it easier for your customers and your business with a view to freeing up some of your important time so you can spend more time out of the business like you are today in this webinar, working on your business. So with us at ANZ, we work with some amazing business partners, just like you probably have some great business partners as well. So we're going to have a look at Ngāho Pākihi a ANZ. So this is our fabulous business partners. And we've got MYOB. So I talked earlier about MYOB in terms of accounting software. So they're going to be able to help you manage your day-to-day bookwork easier, taking care of things like GST, invoice reporting and expenses. With ANZ customers, for new MYOB customers, they've got a 12 months free MYOB essential. So if you're not with MYOB or not with accounting software, great opportunity to take advantage of that support. Smart payroll. I know some people that are using smart payroll and it's really effective. So they offer online payroll system that is fast, easy and super secure. For new ANZ, well, for ANZ customers, for new smart payroll customers, 6 months free for new customers, which is great. Saves customers, it's going to save you time and money with automated payments. It's also going to help you take care of the compliance and automatically file reports with the IRD on your behalf. And lastly, Expensify. For those of you that just have a wallet or a handbag full of lots of receipts, what this is going to do is a cloud-based, which is awesome. They're an expense management software tool that allows you as business owners to easily manage your receipts and expenses. You just upload them straight away. So for ANZ customers, for those of you that don't have Expensify, we've got a 3-month free trial. So make sure you are reaching out to BizHub or talking to one of our local business banking specialists who can help you with how we can support you more. So we also support customers and business owners in many different ways. And it's my absolute pleasure now to hand you over to Paige, who's going to take you through what other support ANZ can offer. Kia ora, Paige.
Kia ora, ngā mihi nui, Crystal. Me pēhia tātou e tautoko i ngā kiritaki, how ANZ supports our customers. There are 3 key areas I want to highlight of where we, ANZ, can offer you some help with your journey. Firstly, I encourage you to jump onto our website, anz.co.nz, and find the BizHub. The link has been copied into the chat box within this webinar. This is an all-in-one online resource that helps navigate the course of starting, running, and growing a business. You'll find access to a range of practical and useful tools, templates, guides, workshops, and webinars to help your business thrive, such as this Māori in Business speaker series that you're tuned into now. There are many other topical webinars with inspirational speakers and insights you may find of interest. Think of it as your go-to for guidance and inspiration your business may need. They are all free, so make use of these resources. Second key area is having good functional day-to-day banking services. It is a critical part of running your business, and I do encourage you to invest time with your bank, ensuring you have the right setup specified and tailored for your needs. No matter what stage your business is at, from startup to expansion and maturity, get control over how you manage your money. It can make a big difference. Part of setting up your business right can include digital tools such as ANZ FastPay and other digital platforms that we partner with, such as whai and Smartly, which Crystal spoke to you about in the earlier slide, so I won't reiterate here. I will say though, see value in investing time into this. Even start small and have a separate account for tax and GST. This alone can be a big help. Third area is access to finance. Granted, this isn't for everyone, but it can help to accelerate your growth and take your business to the next level. Whether you're starting out, managing, or growing your business, we've got flexible range of ways for you to borrow. If you are approaching the bank, be prepared. Where we see success is when customers are open and understand what they want to achieve. Your why, your plan, your mark, your execution. Part of this is having a really good business plan, which was in our first Māori in Business speaker series, which is recorded and on our website. The second part is what we have talked about today, being your cash flow. Preparing your cash flow, understanding your peaks and balances. This webinar is recorded and will go online in a couple of weeks. We also want to know, what do you want the money for, the purpose, and how will you pay it back? And how will you pay it back if things don't go to plan? If you can answer those questions and articulate them to the bank, that is a great start. We are here to help you on your journey, so don't be whakama. That is a brief snapshot of where I think we can help. I will now hand back to Crystal, where you will have the opportunity to ask questions. Kia ora.
Kia ora, Paige. Kia ora, everyone. So it's pātai time. So if you have any questions, please do drop them in the chat bar, and me and Mel and the team will answer them for you. So any questions that you may have or any thoughts or comments that you would like to share would be amazing. So we'll just give you all a couple of seconds to do that.
Just Crystal, I see there's one. Vaughan, you did make a comment earlier when Crystal was speaking around pricing and quoting. Do you want me to do that, Crystal? Or?
Oh, sure, Mel, that's fine.
So I think quoting is a really good point, and it's something to really look at. One, managing your time, because if you're doing a lot of quotes and not following them up, that is loss of revenue to your business. For example, I was talking to a friend that prints t-shirts the other day, and I said, well, what if someone does a quote on your website? And he's like, oh, I just leave it. I said, well, even a follow-up email. So, you know, I like a bit of fashion. If I leave something in the shopping cart, some of those websites will email and go, oh, did you forget that? Or if you buy it now, you get 10% off. So following up, if you're doing quotes, if you're going out and actually going on site and doing quote, it is use of your time. So a simple follow-up phone call is really good. Around the pricing point, Vaughan, look, pricing is really tough out there for some industries. I know particularly for construction. I think it's building into your terms and conditions around quotes, maybe a set period, or breaking down if it is a bigger project, but it is a very good point to make. So thank you, Vaughan.
The other thing too, just on quoting, so I remember really vividly the story. So I was doing a face-to-face cash flow workshop face-to-face in Hamilton. And there were a couple of tradies in the audience that were doing quotes. And we had a bit of a chat, because me and Mel and Stephen, we do face-to-face, we love to network, and we have a good kōrero in the break and talk to business owners about maybe some more one-on-one stuff. But he said to me, I said, so how's that follow-up process going for you? And he said, I don't follow up. And I went, yeah, well, you don't what? And so anyway, when I got chatting to him, the reason he didn't follow up because he didn't want to feel that he was too pushy. The challenge there is he's missing out on business. As a consumer, I've asked you to come over. You've done all that great work. We're really busy, right? So customers are really busy. So if you are quoting, please make sure you follow up because you're probably going to lose business. And as customers, we want you to follow up, right? Because you've done all that hard work and we're busy living life. And so if you can follow up, that would be really, really cool. The other thing is you can actually do break even on quotes at that same webinar, well, same face-to-face workshop I was at. Someone walked in and said, oh, I'm a plumber, I'm from England. He'd moved over here with his family, his partner was Kiwi, and they moved over here. And I said, so what are you thinking hourly rate? We're just chatting. He goes, I was $65. And I said, oh, how'd you arrive at that? Oh, I think that feels about right. So there's a little bit more work that goes into that. You've got to research the market. You've got to think about what your costs are going to be. You've got to factor your costs in. To make sure you are thinking about that if you are pricing your service business on an hourly rate, what does that look like? What do the costs look like? What's your profit margin going to be in that calculation as well? So we've got some here. I'll cover that one in a minute, Rebecca. So Vaughan, this is just feedback from Vaughan. Kia ora, Vaughan. It's true, many suppliers don't like increasing prices, fearing they will lose sales. Customers often take advantage of this. But I think of the exercise I do with you, and I've done with over 4,000 to 5,000 business owners, when we put our customers' hats in and we get into our customers' shoes, we will pay a little bit extra for quality, right? So that's more about us being fearful and our fear that people aren't going to pay that price. But the reality is we can't soak up the extra expenses that are going on in the world today, the extra rising costs, because that then affects our bottom line and our profit margin and means that we get to spend less ourselves elsewhere. So just make sure we are thinking about that. And Mel, here's a question for you. How do you build your non-contact time into your costs?
Yeah, really good point. And that's sort of where I was going with the quote time. So when you work out your time, an average day, 5 working days in a week. I know my husband and I are a business that we don't work 8 hours and 5 days a week. It's a lot more than that. But generally, if you're working on that, and then you've got to break that 8 hours down. Obviously, could be travel time, there could be admin time if you don't offsort. So a lot of our businesses out there, you're HR, you're admin, you're it, right? So it's sort of writing down what I suggest. If you're not sure, just spend a week or two just writing down what you spend and be mindful what you're putting off. So I know for my husband, I love numbers. He doesn't. He likes doing the geeky technical stuff, and that's why he does what he does in our business. But he still needs to make time for the numbers, and you need to look where you're spending your time. Is it spending quoting, admin, and then looking at that time? What is that time that you're spending doing sales, and what are those non-chargeable times? So the admin, having lunch, going out, it could be networking, but networking is important time to connect and create that business. So looking at where you're spending that time and then breaking it down for you and then making those next steps, a bit like that review and measure point, is always doing that in different areas of your business.
Awesome. Kia ora, Mel. Well, I think that's the end of our questions team. So I'm going to shout out and give a big e mihi ana to everybody. Thank you for joining us. I hope you've enjoyed today's session and just got out of it a couple of those things that you can take away and implement on your own business. I know, as you can see, me and Mel are really passionate about running these sessions. So thank you very much for joining us. And again, congratulations for taking time out of your business to work on your business. It's really important that we do this as business owners. We tend to invest in our business. We intend to invest in our people, which is awesome stuff. But sometimes we forget to invest in our business's biggest asset, which is you, the business owner. So make sure you're giving yourselves that quality investment as a leader. It's now my absolute pleasure to hand you over to the fabulous Carleen, who's going to close today's session. Kia ora, Carleen.
Kia ora, tēnā no koutou katoa. He mihi kauana kia koutou e Mel, e Crystal, e Paige, mō koutou kōrero. Just really lovely to hear you all share your knowledge, share the opportunities for our whānau. Kia koutou te whānau e whakarongo mai ana, e huitahi mai ana, I raro I tēnei anō te kaupapa, he mihi kauana kia koutou. I roto I tēnā, ngā mihi nui rawa tū kia koutou mo te wānei o Matariki, I roto I tēnā, whakamānoatia a Matariki e. Tēnā koutou, tēnā koutou, tēnā no tātou katoa. Kia ora.